Morning traders, Richard here with a quick Ichimoku cloud chart review of the Spider ETF, S&P 500 ETF. Now this very strong rally that started in April is now a little bit long in the tooth, and it's starting to become a little bit extended from the top end of the cloud. We looked at the price action there with respect to the distance of the cloud. So we now have a much needed consolidation taking place. Not as strong as this consolidation or rapid. It's a bit more of an orderly correction back down to the top end of the cloud. And we now retesting the top end of the cloud for support. This was a successful retest of the front-end cloud chart support level there, but keep a close eye on this, the bottom end of the front end of the cloud. That's also a critical support zone. So we might get a quick swing trade relief rally back up from this top-end cloud chart support zone, but that can run into trouble here with the standard line because the standard line support failed there of the Ichimoku cloud. So that standard line can now be a resistance level, as well as the top end of the front end of the cloud there, and the ultimate top end there, that level there, and then the top end of the cloud there. So these are the upside resistance targets if we get a relief rally here. If support fails at this level, we can hit the bottom end of the front end of the cloud here. This level there, 652, that's another major support zone. So, but it's not all bad news, because as long as the market stays above the bottom end of the cloud, the rally's okay. We're just consolidating after becoming too extended from the cloud. So there's plenty of swing trade opportunities back into the spider at this support test. And if the support test fails, we could retest this one at 652. Similar to this low, you can see that low was tested twice there. So that's major support zone. So we're at an inflection point. The bottom in the cloud is the line in the sand. If we dip below the bottom in the cloud, then it's a total bear market, basically, from an Ichimoku cloud chart perspective. But any kind of rebound from the top end of the cloud and the bottom end of the cloud makes for nice swing trade opportunities. So far, still okay. The bull market's still okay from a cloud chart perspective. Price action still taking place above the bottom end of the cloud. We're just getting a consolidation back down to top end cloud support. And these things tend to happen quite oftenly when the market becomes too extended from the top end of the cloud. We then get a consolidation back down to the top end and bottom end of the front end of the cloud. So it's not all panic stations yet, but more of an orderly consolidation to test support at the bottom and top end of the Ichimoku cloud. So keep an eye on those two levels for potential rebound swing trade from those levels when support comes in. And then the upside resistance target stop would be the standard line there. The top end, the front end of the cloud, all these levels would then be the upside resistance targets. But so far so good. Bit of an orderly correction with plenty of swing trade opportunities in and around these cloud chart support zones. Now, taking a look at the weekly Ichimoku cloud, it's a little bit more nerve-wracking because we can see we're very far extended from the top end of the cloud. So there's significant downside risk in this market if we consolidate back down to the top end of the front end of the cloud, 652, which is that low. So we could see that low tested, and then another relief rally back up to test those resistance levels. But there is still some downside risk to the standard line back here. Let me just put a line in there. So these zones here at 632, we can see those levels being tested in the next couple of months. So bit extended from the top in the cloud. We look at this gap between the price action and the top in cloud chart support zone. That's still significantly wide. And if we look at the previous correction, we can see we get right down to the bottom in the cloud here and to rebound from there. So there is downside risk towards the standard line there, as well as these old highs here over the next couple of months. So that's the downside risk if the economic climate deteriorates. These are the downside risk targets. But for now, keep a close eye on support to come back in at 652, the top end of the front end of the cloud on the weekly Ichimoku cloud. Unfortunately, we are below the standard line, the turning line in the Ichimoku cloud there. So that's a bit of a negative risk factor. But the weekly cloud still looks very risky from an Ichimoku cloud chart perspective. Just back to the daily, so roughly this current 3 point something% correction can turn into a 5% correction, which is pretty normal for this kind of post a correction after this very strong rally that we've had in April. So keep an eye out for any support to come back in at the top end cloud chart levels there, but keep in the back of your mind that we can still test the bottom in the cloud, but these two are both swing trade opportunities on the daily going into December and into the year-end rally, that we might see these targets, upside targets, being retested from an Ichimoku cloud chart perspective. Thanks for watching. Until next time, happy cloud chart trading. Bye for now.